Are you thinking about financing a used car? It might seem like a straightforward process, but trust me, there are some key things you need to know if you want to avoid overpaying on your loan. Today, I'm going to reveal some insider tips that can save you thousands when financing a used car. Stick around because what you don't know could cost you big. First, let me hit you with a surprising fact. Used car loan interest rates are typically higher than those for new cars. In 2025, the average used car loan interest rate is around 9%. But why, you ask? It's because lenders consider used car riskier. They depreciate unpredictably, making lenders cautious. But don't let that scare you. I'm about to show you how to get a better rate. Yes, even with the 9% average, there are ways to beat that rate. The first tip is crucial. Check your credit score before you even think about applying. Why? Your credit score is the number one factor that determines your interest rate. The higher your score, the lower your rates will be. Lenders generally want to see a score of 600 or higher for used car loans. But don't worry if your score isn't perfect. You can still find lenders who specialize in working with people who have lower credit scores. Yes, those options exist, but they come with higher interest rates. A small improvement in your credit score can actually save you thousands over the life of the loan. So if you can boost it even by a few points, do it before applying. Now let's talk about specific lenders. PNC Bank offers competitive used car loan with rates ranging from 7.34% to 16.24% with loan terms stretching up to 7 years. If you're looking for a more flexible option, Consumer Credit Union offers no mileage or age limits on the car you're financing, with rates starting at 6.54% and terms up to 7 years. AutoPay is another great choice, especially if you're looking to buy from a private seller, offering rates as low as 4.67% with no payments for the first 45 days. And for those who need a higher loan-to-value ratio, Chase Auto offers up to 140% LTV with interest rates between 6.74% and 20.24%. As you can see, each lender offers different perks, so be sure to compare their rates and terms carefully before making any decision. Here's another tip that too many people overlook. Shop around for the best rates. Don't just go for the first lender you come across. Compare offers from traditional bank, credit union, online lenders, and even dealership. Believe it or not, credit unions often have some of the lowest rates, sometimes as low as 6% for prime borrowers. That's well below the average. On the other hand, online lenders like Livestream or LendingTree can give you lightning fast approvals, often within 24 hours. But convenience doesn't always mean savings, so make sure to compare offers carefully. Now let's talk about down payments, and this is where you can really save. Most lenders will require a down payment of 10 to 20% of the car's value for a used car loan. The bigger the down payment, the less you'll need to borrow. And here's the exciting part. The less you borrow, the less you pay in interest. A bigger down payment could even get you a lower interest rate, especially if your credit score isn't the best. It's one of the best ways to lower your overall loan cost. Here's something most people don't realize. The length of your loan term matters a lot. Used car loans generally range from 36 to 72 months. Sure, a longer loan term might give you lower monthly payments, and here's the catch, you will end up paying much more in interest over time. If you can afford it, aim for a shorter loan term. The shorter the term, the less you pay in interest. It's as simple as that. Now here's a trick that could put you ahead of the game. Get pre-approved for your loan before you even start shopping for cars. Why does this matter? Pre-approval gives you a clear picture of how much you can borrow and at what interest rate. This not only helps you stay within budget, but it also gives you leverage when negotiating with dealerships. Imagine walking into a dealership, knowing exactly what you can afford and having the financing already lined up. That puts you in the driver's seat, literally. Speaking of dealership, here's something you should know. Dealership financing isn't always the best option for used car loans. Dealerships often work with third-party lenders that charge higher interest rates. While it might be convenient to finance through the dealership, it could end up costing you significantly more in the long run. My advice: always compare their offer with outside lenders like bank or credit unions before signing anything. Here's another factor to consider that most people overlook: the age of the car you're financing. Lenders prefer cars that are 5 years older or newer. Why? Because newer cars hold their value better, which means lower risk for the lender and better terms for you. But if you are looking at an older car, be prepared for higher interest rates and stricter loan terms. Some lenders won't even finance cars older than 7 to 10 years. Make sure to ask your lender about their policies on older vehicles before you commit. So, how can you ensure you get the best possible deal on your used car loan? Let's recap. First, check your credit score. This could be the difference between a high and low interest rate. Next, shop around and compare offers from various lenders, including banks, credit union, online platforms, and dealership. Consider making a larger down payment to reduce your overall loan amount. Also, aim for a shorter loan term if you can afford it. And don't forget to get pre-approved before stepping into the dealership. This gives you an edge in negotiations and keeps you from overspending. Now, I know the process might seem overwhelming, but it doesn't have to be stressful. Financing a used car can actually be a smart financial decision if you take the time to understand the options available to you. You will save money on interest, avoid paying too much, and get the car you want at the price that fits your budget. Here's one last tip to leave you with. Don't rush the process. Take your time in comparing rates, terms, and offers. This could be one of the largest purchases you make, so being well informed is key. A little extra research now could save you thousands over the life of your loan. And who doesn't want this?